Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow.
Let's start the show.
Hi, everyone. Welcome to Leafy Podcast. Thank you so much for joining us today. We have a really special guest. Very excited to have him on the show today with us. And also on the show, we have our hosts, Brian Price and Jennifer Glugorch. And thank you both for being on today. They are also the CEO and COO of Leafy Legal Services. So I will go ahead and hand it over to Jennifer so she can introduce our special guest.
Well, I had this huge intro done because this guest has done like everything and all the cool things that I really like. So number one, they're an author of The Perfect Investment, Create Enduring Wealth, which came out in 2016, from the historic shift to multifamily housing. So that is just a great book if you haven't already seen it, if you're in this space. They have their own podcast, How to Lose Money, which I love that name. I'm going to find out more about it. They started out as an engineer. So here's the story before I tell you the name. They started out as an engineer and then got an MBA from Ohio State. Then they worked at management development at Ford Motor Company. Then after 5 years, started a staffing company, you know, my personal little fave there. So I love that. And then they sold that and to a publicly traded firm for $2.9 million 5 years later. This person was a finalist for Ernst & Young's Michigan Entrepreneur of the Year for 2 years straight. And they've been on HDTV. So there's like so much about him. So anyway, I really want to welcome Paul Moore to the show. Welcome, Paul. We're so excited to have you.
Hey, it's great to be here. It's a real honor. Thank you.
That's great. So right before the show, we were just kind of like chit-chatting and we were talking about, you know, what we do. And then Paul said, well, what I'd like to talk about is passive investing for busy entrepreneurs. And he had a great story of telling people like, why are you killing yourself when you have no time? And these entrepreneurs that are already, you know, they're trying to do all this stuff, but then they know real estate is important. They know it's good. They know it's a great source of income, but they end up just doing this hamster wheel thing. So Paul, take it away and talk more about that.
You know, I was on the phone with an oral surgeon recently from the Pacific Northwest. He said his wife was an orthodontist, I think. And he said, we're building a 20-home single-family portfolio to be able to replace at least one of our incomes and retire eventually. I said, great. And then I dug in a little more and he said, yeah, it's killing me. He said, I'm on the phone with painters between oral surgeries, and then I'm trying to put, you know, screen good tenants. And he said, it's driving me crazy, and I'm only on my third home. I don't know how I'll ever get to 20. I was talking to another lady who lives in a place where investing is really expensive, and she was trying to find another place to invest. And she said, how am I going to find a property manager and a broker I trust and all these different things she was concerned about? And then she said, you know, wait a minute. Why am I working harder than I need to make less than I could? And she realized that day, the light bulb went off for her, that she could be a passive investor and probably make more money with virtually no effort after just vetting a great operator to invest with. So, you know, that light bulb went on for me a couple of years ago, and we decided to get out of multifamily syndication after flipping 50 or 60 houses, lots, and building houses, building a subdivision, building and operating multifamily. I decided it was better for our company to get out and be a passive investor. So our big value proposition is finding great best-in-class operators who offer outsized returns, limited downside risk, and we provide those. We're a conduit for our investors to invest with those operators through a fund we set up.
Wow, that is very interesting. And it is so interesting because I just had someone reach out to me on Bigger Pockets and ask me, in fact, I'm going to go on to Bigger Pockets right now and tell you what they just did. They're interested in investing. They just came to me. So this is not just one person.
So
This is
while
probably a
she's
lot.
looking that up, why
No,
don't
I
you
got
tell
it.
us a little bit about what kind of, we looked at operators and going through the, finding the right ones. What kind of process do you kind of go through to find someone that maybe is the right fit versus someone that just is telling you whatever you want to hear?
Yeah, Brian. So it's really important that we want operators who have been at this well before the last, the Great Recession that started about 11 years ago. So we want operators with a cohesive internal team that have a W-2 staff that's been working together in, specific roles for years. We want to get a good gut feel for them. We want to meet them in person and see how they treat the waiter and see how they treat or talk about their spouse and their employees and maybe their ex-employees and how they speak about their investors. We want to look at their books. We want to see transparency in that. We want to see how the people they bought, talk about them and if they would be even willing to invest with them, which sounds like an anomaly, but we have an operator who has millions of dollars from people he bought assets from who turn right around and invest with him because they feel like he treated them well. We're looking for people with a great acquisition pipeline and a great strategy to find mom and pop deals. And we find those are the best types of deals that have a lot of meat on the bone and limited downside risk. And so that's some of the things we look for, Brian.
Okay, awesome.
What is your limit? Like I guess your investment limit. Do you have a limit of how much investors, like what is your, I guess, avatar for someone to approach your company and say, hey, we'd be very interested in getting into your pool? What would they need to be able to do that?
Yeah. So, the SEC regulates us pretty heavily on this. So we work with accredited investors.
Okay.
And we work with investors who, are willing to invest at least $50,000 and they're willing to tie that up for a number of years. We look to do a refinance or repayment of principal in about years 4 through 6, but that's still, they're still tied up until they get all their profits, usually for up to a decade. And, if you listen to Warren Buffett, he says, even if you have the opportunity to trade in and out of stocks every day, you shouldn't. You should buy something and hold it for over a decade. And of course, that's what real estate forces us to do. It has the liquidity penalty, if you will. And we're happy to be part of that type of thing. But we're looking for investors who not only meet those criteria, but who have a natural psychological fit with us as well. We don't work with anybody. We want to work with people who really have the same mindset that we do.
Yeah, that's great.
I love that you have such a humanistic approach to it. Because and that you want to vet the people you work with. You want to work with people who make you feel great about working with them, and that you care about their stories, they care about your story. And that way, even if you're just getting property and you're doing this for income, at the end of the day, you're helping people, and you're helping people because you know them and you know the companies that you're working with, and you get to really understand your impact. I love that. One of the things that you talked about is about finding out your big why. Why do you think that's important for investors or entrepreneurs or even executives to find their big why?
I found myself after selling my company at 33 years old with a couple $1 million and no sense at all about investing or what to do. I wasn't really prepared for this. And so, I woke up on October 7th, 1997 with a couple $1 million in the bank, but really no happier at all than I had been the day before. And I actually moved to the Blue Ridge Mountains of Virginia to start a nonprofit organization that never got off the ground. And I thought, I'm going to be the best father to these 2 kids that ended up being 4 kids. And I'm going to be the best husband and the best friend. And I actually... I was a high energy entrepreneur and I found myself spinning my wheels, bored, and I became the worst version of myself as a father and as a husband, as a friend. And so I think it's really, really important that we have a big why that transcends, making money or retiring or success. And, for me, I don't know what you all know about this, but Human trafficking is incredible. Did you know if you took the record, and I don't mean the average, I mean the record profits of Apple, GM, Starbucks, and Nike, added those together, the record profits, and doubled that number, that's the approximate annual revenue generated by human trafficking. And you know, folks, I want to believe that if I was alive in the 1800s, I'd be an abolitionist fighting against slavery, or if I would have been an adult in the 1960s, I would have been fighting for civil rights. Well, this is a civil right, and this is slavery, and it's been, their lives have been ripped away from tens of millions of people. The largest slave population in the history of the earth is right now. And I really feel like it's important that we do something about it. And so one of the things I'm doing while I'm on a roll here is I'm actually working with a group of folks in Dallas, and we're doing something called the Freedom Place Project. It's freedomplaceproject.com. We're going to build up to $1 billion office building, and we're going to donate 100% of the developers' profits to fighting human trafficking. And we're hoping to use this as a model to roll out nationwide.
Well,
that's a really big why.
That is a really big why. You know, I didn't even realize how much human trafficking was a problem. I always thought, well, that's third world countries, which is amazing considering the fact that I was homeless throughout my entire college career. I lived in and out of shelters, and I was around people. I mean, that was the people I was around, right? Wow. And I still, even as an adult, you know, did not realize it was a problem until the Super Bowl came to Houston. And there was such a spotlight on it, and people were getting busted for it. And they found they were rescuing these girls brought in from it. And I'm like, how is this happening now? It was just horrifying. This is my town that's right up the street. Like, what's going on? And then, of course, the current administration has had a record number of child trafficking busts going after it.
Right.
And I'm, you know, it's just amazing. I really applaud you for doing what you can to get this out there, because you can see it. You know, if you see something, say something. There are so many businesses and things like that where if you see something, say something, because who knows what these, you know,
it's so true.
Children and people are in.
Yeah. Talking about the current administration, they actually have an ambassador for human trafficking with a fairly huge staff of people who are going around the world trying to fight this. So my hat's off to them, and I hope that continues in the next presidency, whoever that is.
Yeah. Me too. Absolutely. So how did you, oh wait, you already talked about that one. I think Brian has a question. I'm sorry.
So let's go back to your podcast, How to Lose Money, because I think it's pretty interesting, because you have a really big following and it's a cool name. So it's interesting how you came up with the name and kind of more about it. And you know, so other viewers that are watching this can also get on your podcast as well.
Yeah, so it's How to Lose Money. You're right. It's crazy. We you know, for years I would run across people that, I mean, I would go to conferences, and whether it was in my personal life or professionally, and these speakers would get up, and I understand they would talk about all their successes and their, you know, all the wonderful things they do. But I'd see the people around me, you know, and I even talk to people who would just slink down in their chairs real low. And they would be like, you know, I'll never be like them. I'll never have the advantages they had. But I got to know some of these people, and you know what? They had the same self-doubts and fears and failures and losses along the way that these people I was sitting with in the audience had. And the difference is the people in the audience knew about all their own problems, but they didn't know that the speakers had the same problems, sometimes worse. And so I decided if I ever was going to have a stage, I would actually talk about problems, failures, pain, loss on the road to success. And of course, when we started the podcast 3 years ago, that's what we decided to do. And that's why we named it How to Lose Money.
Awesome. Yeah, that's great. It's interesting. Yeah. How that all happens is even the most successful person has probably had the biggest failures too at the same time.
Right.
I know personally, before you talked about with the operators, how they, made sure they got through 2008. Well, personally, I lost my shirt in 2008. So I know exactly what it's like to fail. And so it's cool to be able to highlight that, because I think it's important people to see that, yeah, we're all humans, and that, we have failures that happen in our lives, and it's not what happens to you, it's how you get up and keep moving forward.
That's right.
That's amazing.
No, I was going to say, so if you're starting out and you're interested, so you talk about passive investing. Do you think that can only be through high wealth individuals, already accredited investors? Are there passive investing opportunities for people who are not at that level yet, who are just starting out, who want to do that?
It's interesting. For decades, commercial real estate investing was for the Forbes 400 or for the really, really wealthy and successful. And there was an effective barrier to entry for most of the rest of us. But in the Jobs Act, passed under the prior administration in 2012, of course, it opened up the door to crowdfunding and syndication and all types of things that were not available prior to that. And so, yeah, there are lots and lots of opportunities out there for somebody that even has, $5,000 or $10,000 that wants to invest. There are crowdfunding websites and syndications. You still need to do the same level of due diligence. You really need to look carefully at the operator. But yeah, there are portals that are giving people access and information that they never had in the past.
Well, that's really good, because we were talking earlier about the question that I got asked. I'm looking at it. It goes, "Hey, it's Bud. I'm interested if you would know anything about finding investment partners. Have you ever used Fundrise or something similar?" And so there's a lot of people that are trying to get into that. And I was like, "Hey, guess who I'm talking to today?" And blah, 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 blah. And so I'm going to find out about different things and talk about that. I was trying to get him to listen to the podcast, because we have a lot of people talking about all variety of different things, and he's looking to get started. Ex-military, spent a lot of time in the military, coming out. It's not what he thought it was as far as the job market goes, which is happening to a lot of our ex-military. That is something that's near and dear to my heart, is helping veterans get into living wage jobs that are appropriate with what they have. And so I like talking to veterans about that. So
yeah, that's wonderful. It's really interesting. I got a message 14 hours ago from somebody on Bigger Pockets, a lady asking the same question.
Really? It's amazing how people want to know that. We need to get this information out to them so they can start and they can change their minds, because really, especially repurposing and utilizing the land correctly, I think is very eco-friendly. You're taking a house, you're flipping it, you're making it good again, you're putting a family into it that can love on it. So real estate investors, they can be very socially and ecologically conscious too.
Right.
So it's like a really great thing to get in, depending on what you're bent in.
It's really true. And I'm going to give you a little resource here that you wouldn't find necessarily unless you look closely. It's called the Real Estate Crowdfunding Review. Mm-hmm. And you probably ought to interview the guy who's behind that. It's Ian Ippolito. Ian was a very successful tech entrepreneur, had a very famous company he sold, and he now does real estate reviews of real estate syndicators on his website.
Oh, wow. Well, I'm going to send that information over. That's really great. That's really, really, really great.
Yeah, it's really helpful. It'll help investors of all size find the right syndicator. Yeah. They've even got a list of investment opportunities for non-accredited investors on there.
Oh, that's great.
That's great.
A lot of times when people say invest in real estate close to you, when it comes to syndicate type of arrangements, do you feel it's the same thing as finding an operator that's close to you, or does it really matter now that we're so connected?
Yeah, I used to think that, but Warren Buffett has taught me, the best operator, the best opportunity might be somewhere across the country.
Yeah.
And if you find the right operator in a distant location versus a mediocre operator next door, I would certainly recommend getting the right operator. The difference can be huge. I mean, there are operators right now who are making, a decent return of 5 to 10% for their investors. But there are other ones, believe it or not, that are generating a consistent annual return of over 50 and even 60% for their investors. And that may sound like I'm fudging the numbers or
it does.
crazy, but actually a third party called Preqin, Preqin, reviews some of these. And our company actually, because of that, actually ended up developing a close relationship with an operator who does that. And we're really excited about it. And now that I know him pretty well, I've spent some time with him in his office and in the field, I know how he does it, and it's stunning, and it is possible.
That's great. Oh, okay. Yeah, that's really good to know. Because it's different than like a public stock or something like that. There's like a ticker and they can see what their earnings were. Now do they, when it comes to these types of operators, are they really open with their books and what their earnings are? Or how does one really kind of get to the understanding that what they're being told is true and that they can actually see the numbers?
Not every operator is as transparent as this one, but this one in particular is the most transparent. I know. You can walk in to their office anytime, announced or unannounced, and ask to see their books. He considers all of his investors partners. And he does everything with them in mind first and foremost. He's a big Warren Buffett fan as well, and he just studies the way Buffett thinks. And honestly, it's really, really powerful what types of results they're generating as a result of thinking and acting like Buffett. Yeah,
that's really great, because I find that with real estate, there's so many times that people don't act as they should. And so because they don't have to show everything, it's easier to tell people what they may want to hear. So that's great to hear that people are being transparent and doing things like that.
Yeah, absolutely true.
The good thing is there's so much information now, and there's more and more information and more interconnectivity, that there are ways to find out. You don't have to have, like you had a rags to riches story. I mean, you didn't even talk about that. You just said, I sold this company. I'm like 20 some odd years old. I'm a millionaire. And people are like, there's some people like, yeah, that guy's just, silver spoon in his mouth. But you actually lost all that, got a couple million into debt, right? And then were able to get yourself out within 13 months by utilizing certain tactics, correct? So
that's absolutely right.
Right. So how were you able to do that? Because everybody can, it's not always going to be perfect. Life is not a bed of roses. I know you hear that. But if you are consistent and use the right tactics, it doesn't have to just be a destroyer of worlds, right? So how were you able to do that?
It's a great question, and it's probably not going to be the answer you expected to hear, because exactly a decade after I had a couple $1 million in the bank, I found myself $2.5 million in debt with a partner, and my business partner pulled out in the last month or so of 2007, said, I can't bear to pay these interest payments anymore. It's all on you, Paul. And so we're still very good friends, by the way. And but it was a hard time. Of course, we had no idea we were about to plunge into the deepest recession since the Great Depression. We assumed that the worst was over in the fall of 2007. So I thought, we'll be able to get through this. Well, anyway, I have a practice of morning meditation. I was meditating one morning, and I came up with this idea, WWGMD, and which doesn't mean what would grandma do. It means what would George Mueller do. Now, George Mueller was this crazy guy back in the 1800s. I mean, crazy in a good sense. And he basically did all kinds of things radically different than everybody else. He had an orphanage, which ultimately served 10,000 orphans on the streets of Bristol, England. Wow. And I knew George wouldn't have been in debt at all, not even $1. But since I was in debt, I had to go from there. And I thought, what would George Mueller do? Well, he would try to do something really radical. And I had this really distinct sense. And my friends met me at a restaurant around that time. And they said, what are you going to do? Are you going to declare bankruptcy? I said, no, guys, I'm going to give my way out of debt. And that
I
got
love this.
crickets.
I'm loving this. Okay, tell me more.
That got crickets because they were like, are you seriously thinking about that? I said, yeah. So what we're going to do, I said, we're going to pick some nonprofits and some charities and my church and things that I'm really passionate about. And we're going to give really aggressively a certain amount every week starting January 1st of 2008. And we'll see what happens. And so we started this process. And about 4 weeks into it, I was talking to a real estate developer and I was laying out this big problem I had. I had this 5-acre waterfront tract that I was going to try to make into a small subdivision. And it was impossible. It was illegal to subdivide it based on some zoning things. And he said, yeah, you ought to try this certain thing. And I said, oh, that's not possible. I already checked into that. He said, well, think about it. And like this, I had this light bulb moment right then, like, oh, wait a minute. And I turned the thinking around and I met with the planning and zoning board just 2 days later. And I laid out this preposterous plan to subdivide this. And the lady was like, she looked at me and shook her head. She goes, I've been doing this for decades and no one has come up with such an outrageous plan. And honestly, she goes, you found a loophole that no one has ever seen. And she said, you can do this. And so there was a lot of work ahead and there was, like a year of really, really hard effort involved. But 13 months later, I found myself completely debt free.
Wow.
That is the best story. I love that story.
Isn't that crazy?
Yeah, very much so.
Well, that is great. I love that. I love this talk. Okay, because we've got to wrap up here, but I don't want to wrap up. I want to hear all these incredible great things, and I want to put a cape on and go outside and do stuff.
I think the principle here is, it's really, if you give, you're going to get back more. And I think that, people all around the world have that as a tenet of what they believe. And I believe it. Now, I don't think it's automatic. I don't think there's some vending machine in the sky that automatically takes $1 and turns it into $5. But I believe that general principle is still true, of course. And it surely worked that time.
Yeah, that's great. That's a great story.
That is great. That's an amazing, great story. Well, everybody, we've been talking to Paul Moore, getting completely and totally inspired. And he is the podcast host of How to Lose Money. He also is the author of The Perfect Investment, Create Enduring Wealth. He is the managing director of 2 commercial real estate funds at Wellings Capital. And this has just been absolutely amazing. And is there a website that we can send people to? Yes, we can. Wellingscapital.com. Wellingscapital.com.
That's right.
Okay.
That's right. And I've got a couple gifts for your listeners. If they contact us and they tell us they came through you, we'll give them a free eBook, which is a 32-page eBook I have on self-storage investing, and another 32-page book on mobile home park investing. The self-storage investing ebook, by the way, is a condensed version of a new book that I'm publishing on self-storage investing in 2020.
That's incredible.
Awesome.
Well, thank you so much.
Yeah,
I know our
great.
listeners are going to absolutely love that. And we're going to put that everywhere.
We'll put
and
the links below and yeah.
I'm going to go and sign up.
Yeah. Awesome. Well, we appreciate you being on our podcast, Paul. And, I'm sure we'll have you on again if you like to talk about more of your stories. And I appreciate everything you've told us here and all the information.
And don't forget to go to freedomplaceproject.org. Freedomplaceproject.org.
Yeah, actually, I'm sorry, I might have said it wrong. I think it's freedomplaceproject.com.
.com.
Oh, okay.
Yes.
Okay, freedomplaceproject.com. Yeah,
Right.
I wrote
We'll have
it
the
down.
right links in below the video.
Okay. Okay,
right.
Tammy, take us away.
All right. Thank you, Paul and Jennifer and Brian, all for being on today. And we will include all of Paul's links in our show notes so that everyone will be able to find him. If you do have a particular question you would like me to relay to Paul, or if you would like to comment on this episode, please go ahead and email me at Tammy, TAMMY at leafylegalservices.com, and I will get back to you, and we will air your questions and answer them as soon as we get them from you. So thank you everyone again for joining us this week. Please like us and add comments to our podcast if you find us on Spotify, iTunes, Stitcher, Google Play, wherever you listen to us. We really enjoy having you. So have a wonderful day, and we'll see you next time. Bye-bye.
Follow us on Facebook, Twitter, and Instagram.